When I was here earlier, the discussion was about the fact that 20% of GDP is maybe some magic number in terms of where we should be generating revenue. I look at statistics. The most salient one I've seen is that over 50 years, regardless of the tax rate, we average about 17.5%, maybe 18% of our GDP. Our system is such that high tax rates, you're going to get a better fiscal out of it out of the gate, but you generally kind of attenuate into a 1 to 1.5% economic growth rate. Lower rates out of the gate have a negative fiscal to it, which I almost got the CBO to acknowledge. We were paying for the Trump tax cuts, which were chump change back then, $150 billion per year for 10 years, $1.5 trillion. There you get a 2 to 3% growth rate. But how can we expect to tax into a level that, other than a couple years during the Clinton administration, it is so statistically stubborn that with our system as it is, we generate 17.5 to 18% of our GDP in federal revenue. Start with on the left and move to the right, and in like about 30 seconds to 40, because I got another question as well.
It's quite clear that our tax code does have a big impact on revenues. So if you look at both the Bush tax cuts and the Trump tax cuts, in both cases, they had persistent effects on deficits and debt in the long run. And there's a recent analysis actually at the Center for American Progress by Bobby Kogan that kind of traces through those. And if you look at the big contributors to debt in this country, there's two factors. There's the big one-time shocks of responding to the 2008 financial crisis, but also responding to the COVID crisis. Both of those caused level changes in the amount of debt. But also these persistent tax cuts have helped contribute to this fiscal imbalance that we see before ourselves.
So are you saying that you would be able to generate consistently 20% of our GDP and federal revenues where that's not been the case other than just a couple years when rates have been, higher?
I think there are very sensible tax policy reforms that can generate additional revenue to help balance the budget, and I think 20% of GDP would be a good target. It's a political process that determines exactly where you want to land that, but I think one thing to bear in mind is that the United States is a very low tax country relative to our peer nations and a very high deficit country right now, and so we really need to look at all solutions to that, and that includes a more robust fiscal system that raises the tax revenue that's needed, and that's partly about funding the IRS. It's partly about leveling the treatment of labor and capital income. It's partly about leveling the treatment of domestic and offshore income, and all of those would contribute to reducing the deficit in a helpful fashion.
Yes, I would just echo that the United States, is below the median in terms of total tax revenues as share of GDP among other peer industrialized countries. So, it can be done. And actually, Congress had enacted a pre-programmed rise in expenditures with an aging population, for my generation. And actually had done the same for taxes too, the way that tax brackets were set up and other features of the tax code, which were then undone through legislation in the 2000s and 2010s. So I think there would have been a pre-programmed rise in revenues as a share of GDP had it not been for those acts that would have risen, above those historical levels.
Referencing the cross-country comparison here, the way these other countries are raising so much revenue than us, particularly in Europe, is primarily through the value-added tax, not through income taxes. We don't understand this concept here, of course, but we don't have a value-added tax. We have retail sales taxes at the state level. Value-added tax, essentially the same idea, but it's designed better so that it doesn't result in taxes on business inputs. Collects a ton of revenue. It's the primary revenue source in most European countries. The second way they do it is through higher payroll taxes than we have, and so these are both taxes essentially on labor income at the end of the day rather than capital income. So that is where the money is.
So Dr. McBride, do you think we can generate 20% of GDP and federal revenues without depressing the economic growth rate? And then what's the trade-off there? And statistically, again, even before the Bush tax cuts and the Trump tax cuts, if you go back 50 years, we still only generate 18% of GDP in tax revenues.
I agree with you. There's an amazing sort of regression to that level, no matter what the top individual rate is. For instance, it's fluctuated quite a lot through the 80s and the 90s and through today. And I think it does point to a lot of behavior responses to those top tax rates. And one is what I described in my testimony about the economic incentives to work, save, and invest that are related to that marginal tax rate on those activities. And the other is reporting of income. So there's particularly with the higher capital gains rates we saw in the 80s, and then the changes in the 90s that brought the capital gains rates down. There was a huge response.
Out of time
in
here, and I
behavior.
might note that our current spending is now not at 20%, it's about 25% of GDP. And when you look at nearly $7 trillion in our total federal budget, there's nothing that's going to lead to other than chronic deficits that regardless of the rate, we got to get that back down to where it is normal. I've got another question regarding Medicare. Go ahead, okay. So I've been probably the most outspoken senator that we got a broken healthcare system. It's like an unregulated utility in my mind. One side of the aisle maybe wants government to take it over completely. You're still going to be dealing with a broken system, just a payor that may have a little more clout. I found in my own business, and did this nearly 15 years ago, that there are ways, even though it's opaque, even though there are barriers to entry, there's not inherent competition built into the system. I did it from the demand side. And number one, we became the insurance company and saved about 25%. That's how much insurance companies were making on small businesses. But the biggest thing I did was turned all my employees into healthcare consumers, trying to draw out value in a system that doesn't offer it. That's the biggest part of our GDP. It's the part that has grown the most. And whether it's a private payor or a government payor, it's a broken system. What could we do, in your opinion, to reform healthcare, not by giving more of it to government or giving more of it to the private sector in terms of how you pay for it? What could we do by getting rid of all barriers to entry, full transparency, full competition, to actually bring the cost down to where instead of being 18% of our GDP, imagine if we just got it halfway to the world average, which is about 12%, we're freeing up 4% of our GDP. That would pay for all of our deficits we currently run as a country, probably federally, and in terms of benefiting the private sector as well. Start on the same end and tell me what you think about that.
I think there's a lot of low-hanging fruit with respect to reforming the healthcare system to save money. I think there were some important steps in the Inflation Reduction Act to lower costs for seniors in Medicare and also for those consuming drugs like insulin. And I think those are important steps forward. I think there's a lot more that could be done. And there are proposals that the Biden administration has, but also others, in think tanks and elsewhere that I think should be thought of. I think you're right that insurance companies are responsible for a lot of those costs. And if you look at the difference between the American system and those abroad, like that extra layer of cost is very salient. And unfortunately, our healthcare outcomes are also worse than we see in other countries. So I wholeheartedly agree this is an area where we need more reform.
You can all agree with that. How much of my own time have I wasted on the phone talking to a health insurance company? There are definitely ways to align incentives, reduce paperwork burden, make sure that the plumbing works so that electronic records can save the time of insureds and physicians and their staffs. And competition does play a role. There is evidence that in locales with only one hospital system that consumers are hurt by that. So there's many ways to look at this, and we'll have to look at all of them.
Well, sticking to the tax space, the single largest tax expenditure, as documented by the Joint Committee and Treasury, is the exclusion for employer-sponsored health insurance. And so this is a full exclusion of any tax, any income or payroll tax paid at the entity level, the business, or at the individual level. This is the way it's been for decades. It's grown to be a tax expenditure that is costing several trillion, actually over a decade. So this is a huge pot of money here. I think we have to be careful with how we address it, but in my written testimony, I outline a reform that fully eliminates it, along with several other reforms. It is a large tax increase to subject that fully to income and payroll tax. We estimate it would raise about $4 trillion over 10 years, for instance. You need to offset that with some other reforms, tax cuts that smooth that transition for workers. But the problem with the current exclusion is that it creates a huge distortion in the healthcare market, in which employers, our health insurance is, for most Americans, it's tied to our work. And furthermore, it incentivizes insurance companies and third-party payers to have a larger role than they otherwise would.
And with as hard as it's been to hire people, it's a very tricky area when you start messing with fringe benefits. I'd love for the senator and I to look at, in my own business, the key was minor health care. That's done through insurance. Scratches and dents were never meant to be part of an indemnification. And the key, when the insurance companies told me that almost all of the excess in health care is due to overutilization and the fact that you're paying insurance for minor repair, that should be directly between the provider and the individual, only qualified by those that can't afford it, to where you'd have maybe some type of health savings account. But the key was when we took minor health care out of being part of insurance, it started cascading all kinds of positive benefits, and insurance was never intended to pay for, in anything, minor repairs. And we need to think about that in terms of a way that would easily lower healthcare costs. Transparency, competition, little skin in the game from those that can afford it on their minor health care. I think you and I could single-handedly put a bill out there, Sheldon, that might get the movement in the right direction. How about that?